Hi, George Sanders, President, Goldcliff Resource Corporation. We'd like to talk today briefly about adding value in challenging situation. All of you watching this will know the state of the junior exploration and development capital markets. Share prices are depressed. Trading volumes and activity are at very low, almost historically low levels, and new financing capital available to the sector is very, very limited. So this creates an extremely challenging backdrop for those of us in the junior resource space desiring to advance exploration and development stage assets. A few companies have been successful at raising more than $1 million, $1.5 million, $2 million. Sadly, those companies have gone a long way down the road of blowing up their capital structure. Those financings came at low market prices and were seriously dilutive to existing shareholders. Moreover, future share price appreciation will be limited by the large overhang of cheap share purchase warrants. So I'm sure you can appreciate the challenges facing us, all of us, in this business. At Goldcliff, we think we came up with and have executed not necessarily a new strategy, but something creative and effective, and most importantly, shareholder friendly. So back in the spring, we asked our technical team to produce for us bare minimum budgets. Now, I don't like that term bare minimum because it applies not really taking an asset seriously. What we really asked them to do was come up with a necessary program that would add value, but limiting that program in terms of its budget. We were able to do that, and when we received those budgets, we realized that they were within the realm of the possible for being financed internally. And by that I mean insiders in the company, members of the board, management putting up their own funds to finance this activity. And so that is exactly what we did, and over the last 2.5 months, most of the videos that we've created have documented the programs on 2 of those properties. Now, we think that this activity is very, very shareholder friendly, and there are 3 specific points that we would like to make about that. The first is that we've actually advanced these projects. We've gained an awful lot of new geologic information. We're still interpreting some of that information as we wait for lab results to be returned to us. So we're pretty excited about where we're going with that. And we've moved, in both cases, we've moved the properties closer to the discovery stage. So we think that's exciting, and we think that that's what shareholders want us to do. Secondly, we were able to execute this on a limited budget, and we were able to do that with limited share dilution. The financing was less than 5% of the issued capital going into the exercise, so we kept the dilution to a minimum. And very importantly, point 3, which is related to the second point, while we increased the share registry by a little over 3 million shares, we did not increase the public float. That these shares that were issued went to management. They won't be coming back on the market. If in the future the warrants attached to them are exercised, that won't create a headwind in the market. So we in no way increased the float available for publicly trading. All of this we think is, again, very shareholder friendly, and it has positioned the company to be in excellent position to respond almost immediately to any improvement in junior resource financing environment.